Hello everyone. Um, this is Karthik, and you're watching Stock Markets for Everyone series. So welcome back. What is the today's topic? So today's topic is basically we'll discuss about something called as technical analysis. What is technical analysis? And this will be a two-part video. In this video, we'll focus on what is the technical analysis, and we'll focus on one type of charts used to do this analysis called line charts, and in the next video we'll discuss about candle charts. Okay, so without wasting any more time, let's get into the details. So we have already discussed in the previous videos the about what is a stock, and how the stock price changes and stuff like that. Okay, now in this video, let's start with what is this analysis, technical analysis, and why is it needed. Okay, first of all, there are two types of ways of analyzing the stock prices. One is technical and one is the fundamental analysis. So, we'll not go into fundamental analysis, we'll only stick to technical analysis in this video. So, this is about using. So, at the end, what do you want to do? There is a particular stock or a particular company, and you want to know whether it will be giving you, whether it will be going up in the future, which means you are anticipating an up move, or you anticipate that it's not going to perform well. That means the stock price is going to go down. This is all you want. Or there's another case also where you may think that the stock doesn't move much. So, and how much, by how much it may move. These are the things that you want to anticipate at the end whenever you want to do any kind of investment in a particular stock or trade a particular stock. Okay, depending on for how long you want to hold. Right. So for doing that, you need what the information that you have. You have all the historical information, like how this stock performed in the previous time. So in technical analysis, we use things like we only have what is the price of the stock, and there are other factors, but we'll not go into that, like volume and stuff. But let's say I have only the price history, and using this, I want to actually anticipate as to depending on some patterns that happened previously in this particular stock. I want to stock history. I want to anticipate what is the future. So for which where what I'm doing is I'm using historical data. So that means what is technical analysis? It's just use the historical data to identify patterns in order to anticipate future prices. And one of the main assumption of technical analysis is that the patterns repeat. That is something which happened in the past. If a same situation occurs, again the same result will occur. That's the idea behind technical analysis. Okay, and it's a very famous analysis, and it does work most of the time. So, in order to do this, there are some basic ways of doing it, and for that we need to understand certain things, which is what we'll go through in this. Okay, we'll see how it is used and all later. Okay, okay. For now, let's see what. So, because this way you'll understand what the terminology whenever they use, and you can have an idea. So, there are two major ways of analyzing. One is line charts and candle charts. Both are used basically. Each has its own advantages and disadvantages, but we shall go through the first simpler version, which is the line charts. Line charts are a more simpler thing to understand, so we'll start with that. So, okay, so what is the line chart? So here I have given you three ways of line charts. So line charts are simple. This you might have seen in many cases. It's just over time. What the if you say this is the stock price, how is the price moving over time? It's that simple. So whether it is going downwards or sideways or uptrend, we'll see what is uptrend, what is downtrend, and sideways. But just what does line chart give you is this. Now let's understand like how each point, what does each point signify? So in order to do that, you might want to see this line chart, that is the information of how the price changed for only a one single day, or you might want to see for a few days, or maybe for a week, or for a month, or you might want to see for the whole year, for 6 months, or anything it could be. So depending on how long the frame you want to see, that each point in this line will represent the price accordingly, which let's see a real live example as to how the actually line charts look like in the real world. Okay, so this is one particular line chart. This is of Nifty. Let's say this is of Nifty. Okay, so now this is the line chart where the time frame we have taken. I want to watch it. So first thing you need to do is you need to know what is the time frame for which you want to look for. I want to see only the last 1 day's information. Okay, I want to see the price action on a particular day. So only 1 day. So therefore, not a particular day, just for the past 1 day. Then you see this. Then this is what you do. So this, what does it say you? Then in this 1 day, at each minute, there is this each point basically represents. So how this line is formed? By joining various points on that day of the price of various price points. So where it traded. So if you see, these are the prices. So it traded at 521, 522, and so on. It did all this, and it suddenly fell off. That you can know, right? So this is something called a downtrend happened suddenly, and it stopped at some place and then again rebounded. Okay, so this is what happened on that day. But if I want to see over a week, then this is how the chart looks like. So the most important thing is each point here represents a single price. Okay, so that is very important to understand. So each point can only give you one price because there's only a single point. So a point cannot represent multiple prices, right? So that's the thing. So basically, as you increase the time frame for which the past 1 month you want to look, as you do that, the way the line, I mean, each point is taken will be changing. Correct. You want it to be smooth. You don't want it to be too fuzzy because around so line charts basically are used to understand the overall trend of the market. So when I say trend, like overall, how is the particular stock moving? Like, I mean, I don't want the intrinsic details. I don't want what happened inside on each and every bit of it. I just want an overview. That's the simplest word. So that's what you get from this. So as you keep in on a day, only if you see for the past 1 day, obviously you can have more information. But if you see for 1 month, then I can't place the points of every minute and then join. That would be a hell of a graph where you don't get any information from, right? Because why is that? Because you're only able to represent one price per each point, correct? So therefore, what we do here, when you are seeing for a month, each point will only represent a particular day. So in that case, what happens is on that particular day, we just consider where did the stock price close at. So come to just the timings, just a brief idea. So basically every day the stock market opens in India at 9:15 a.m. and then it closes at 3:30 p.m. So on at 3:30 p.m. at the end, where did the price close at? Only that will be available at each point. Okay, and you just join because that is what that gives a fair idea as to what is the overall trend, right? On this with this you can understand that okay, it stopped falling here on 19th September, and one day there was a huge jump, and all this you can understand, correct? And as you go deeper and deeper, 6 months and 1 year, you'll have lesser and lesser. I mean, the closing price will be over maybe on not on a particular day. It could be even on a particular month also, right? So that could be the change that happens. So just to make it as simpler as possible, the graph, the generally days is the thing that is taken on an overall basis. Okay. So if we go for the max, the overall full history, if I want to watch the complete, I want to get an overview as to what happened over the entire history of this. So for this, it's better to just keep it as simple as possible, right? And don't so just maybe you'll have each point for just 1 month. Okay, for each month you just have a point where that means at the end of the month, where did the price end, and in the next month where did the price go? That's all you'll have here. So that way you'll understand as to the what is the overall trend of the market. Correct. So if you see from this, what you can understand, okay, from 2000s around 1992 to 1998 to 2003, the market was moving pretty much sideways. Or first of all, this part there was an up move, another down move, and here there was moving sideways. So when I say sideways, what does sideways mean is it is just trading between two range. It's just trading between in a range. That means there is a particular price below which it's not going, and there's a particular price below above which it's not moving as well. And just it is just oscillating between these two prices. That is the meaning of sideways market. And what is an uptrending market? There's always a high. There is some price which is higher than the previous price that is being formed on a regular basis. Though there are intermittent downsides, overall it's moving upwards. And similarly, the downward is something. So this is, you can say, a downtrend is happening here from 2007 to this. So you can clearly understand that there is a big crash in a very quick time. The slope or the rate at which the fall shows in the amount, I mean, how far uh, vertical the fall is. Okay, the more quickly the fall has happened, that indicates. So here again, this is a sideways zone. This this indicates 2nd November 2010 to almost 2013. The market was moving sideways because the range is the low was something around this and the high was something around 6,000, and it was just oscillating between these two prices. Correct. So and then here there is an uptrend. So this is all an uptrend. So that's what you call. This is what you get from a line chart. And whereas now, okay, this is all fine. I understand that. Okay, so what information do I get? Okay, this is all the overall chart from which, okay, the this Nifty in general is going up, and in between there are some price points. After every huge up move there is certain down move as well, and this now there was one down move which happened very quickly. This information I get, right? And So that's the basic information that I'll be getting from this. Now, what are the disadvantages of a line chart? Because line chart, you can only represent one price for each point, and also you can only view either for a 1 day in the history or 1 week, 1 month. That's the history. The whole thing you need to watch. Therefore, what if I want to know the more inner details as to, okay, today, so for which let's take a simple example with which the things will be more clear. Okay, so let's say to understand the disadvantage. So let's say you have a stock which closed at 1,000 rupees on day one, and day two it actually remained at 1,000 rupees only. Then in your line chart, this will be as just like this, right? It will be just it's be like this. So there won't be any change. That's what you'll notice. But this 1,000 to 1,000, when it has gone, it could have happened in multiple ways. Either one way is it could have gone down to 950 and then come back to 1,000, or it could have gone up to 1,050 and then come back to 1,000, or it could have gone up to 1,050, gone down to 950 and then come back to 1,000. So like this, there could be multiple ways this could have happened, and this might give more information to predict our prices than just knowing the overall thing, right? So this information to capture is not possible using line charts, and that's why we go for something called as candlestick charts or candle charts in short. Okay, so that is where this thing comes in. Now here, if you see this example, in general, uptrend is represented in green because you are in profits. That's the thing. Downtrend is represented in red, and I have just represented a yellow as sideways just to give an information of a traffic light scenario, but there is no rule as such that we need to represent it in yellow only. Okay, where this is a kind of in between. I don't this is not able to decide whether to go up or down, so it's just swinging in between, just oscillating in a particular range. Okay, so that's what is the way to understand. So the most important takeaway is in of this video is to uh, understand, what is the information that you need to understand whenever you see a line chart. So you'll only, what is the thing, you'll get to know about the trend of the market. Okay, So that's the most important thing. You'll know the trend. Okay, that's all. Okay, so that's fine. So this should be enough for this video. In the next video, we'll learn about candle charts, and then we'll take it from there. Okay. So we'll also have a quiz for this video, which will be posted in the description section as well as in the comment section. Uh, do try to attempt it because that would be very helpful for you to understand concepts and cement it properly. Okay. So fine. Now, so that's it. So hope you enjoyed this video. See you soon in the next video on Candle Chats. Thanks. Bye bye. Have a nice day.